We're analyzing Exxon Mobil, stock ticker XOM, to see if it's a great business on sale. This analysis is around 10 minutes. It's going to be intense, but it's going to be worth it. We're using the Select 6 analysis to look at the most telling financial metrics before estimating a fair value for Exxon Mobil. Then we're giving a final rating to the business. There will be a key bonus metric along the way that just might be the tipping point when analyzing Exxon Mobil for your stock portfolio. Before we get into these valuable metrics, let's understand Exxon Mobil's stock performance. Right now, Exxon Mobil trades for $104.54 per share. Year to date, their stock price is down 2%. In the last 5 years, Exxon Mobil's stock price is up 28.5%. They're compounding at 5% annually. The company has nearly tripled from their lows in October of 2020 during this time. In the last 10 years, Exxon Mobil is compounding at 1.5% annually. Their stock price is up just 18%. Going back prior to the global financial crisis, Exxon Mobil is compounding at 3.5% annually. Their stock has just about doubled in the last 2 decades. But there's a little known secret that sets Exxon Mobil apart. The company's a dividend aristocrat. They've grown their dividends in each of the last 40 years. Exxon Mobil is one of just 2 oil stocks that are dividend aristocrats, the other being Chevron, which Warren Buffett has a big position in. Right now, Exxon Mobil pays a big 3.4% dividend yield. Their average dividend yield is in addition to the returns in their stock price. Currently, Exxon Mobil trades $16 below their 52-week high. The company is up $24 from their 52-week low. Around 1% of their shares are sold short. Exxon Mobil is one of the biggest businesses in the world. They have a $422.5 billion market cap. This is a huge company. But the burning question is, why should we be paying close attention to Exxon Mobil? Exxon Mobil just announced they're buying Denbury, a pipeline company with carbon capture expertise, for about $5 billion. They're adding to their reduced carbon footprint. Bigger picture, Exxon Mobil is an integrated oil and gas company that explores for, produces, and refines oil around the globe. In 2022, it produced 2.4 million barrels of liquids and 8.3 billion cubic feet of natural gas per day. At the end of 2022, reserves were 17.7 billion barrels of oil equivalent, 65% of which were liquids. The company is the world's largest refiner with a total global refining capacity of 4.6 million barrels of oil per day. Exxon Mobil is one of the world's largest manufacturers of commodity and specialty chemicals. Exxon Mobil is a different kind of company. It traces its roots to Standard Oil, which was founded by John D. Rockefeller all the way back in 1870. It's headquartered in Irvine, Texas. Now with that understanding, let's get into the numbers. Starting with metric number 1, we want Exxon Mobil's average return on capital in the last 5 years to be above 14%. A typical business earns about 7% returns on capital. Looking for a benchmark that's double this can build in margin of safety based on the quality of the business. Exxon Mobil as an integrated oil company is cyclical in nature. Its profits and its returns are going to depend on the price of oil. No surprise, in the last 5 years, their returns on capital have fluctuated with the price of oil. They've swung pretty dramatically throughout this time. They were negative in 2020. Since then, as things have reopened, Exxon Mobil has rebounded back. They earned 26% returns on capital in their last year. In their last 12 months, they earned over 28% returns on capital. When we average this out, Exxon Mobil earns around 10% returns in a given year over this time. While that's still a few percentage points better than a typical business, this is below the benchmark we're looking for, meaning this is an X on metric number 1. Metric number 2, we want to see revenue, net income, and free cash flow growth to go along with their high returns on capital. This metric's all or nothing. All 3 need to be up for this to be a check. We'll include their numbers up until today when we calculate this growth. In this time, Exxon has grown their revenues by 42%. Their earnings have tripled. Both earnings and free cash flows for the business were negative in 2020 as their revenues were cut by nearly 40%. The company suffered losses both from discontinued operations and the overall cratering of oil prices, which went negative in 2020. Now that oil is back to historical averages, Exxon Mobil is gushing cash. Their free cash flows have grown by 3.5 times. That's huge growth for the business. A big check here on metric number 2. Great to see that free cash flow leads this growth, as it's the lifeblood of any business and it's ultimately how businesses are valued. We'll be using 2 different methods to value Exxon Mobil based on their free cash flows later in the video, so you'll want to stay till the end. Metric number 3, we're looking at Exxon Mobil from the view of an individual shareholder. We want to see earnings per share growth in the last 5 years. We learned in our last metric that their earnings or their net incomes have tripled in this time. Exxon Mobil has also bought back 2.5% of their shares outstanding. These small share buybacks and this big earnings growth lead to big earnings per share growth. This is a check on metric number 3. Metric number 4, we're looking for something similar. We want to see free cash flow per share growth. For Exxon Mobil, this leads to the same result. With growing free cash flows and these small share buybacks, they've grown their free cash flows per share. This is a check on metric number 4. To recap where we stand currently, Exxon Mobil has 3 checks and 1 X through 4 metrics. But there's still something missing. You might think that nailing growth and having good returns is key, but we haven't touched on the one thing that I believe sets Exxon Mobil apart. They have these without using a lot of debt. Metric number 5, we want Exxon Mobil's net debt, which is their total debt minus their cash and their short-term investments, to be below the sum of their free cash flows in their last 5 years. Exxon has brought down their debt pretty dramatically over this time. They peaked at around $68.5 billion in net debt in 2020. They ended last year with $17.3 billion of net debt. Right now, they only have $8.8 billion in net debt. In their last 5 fiscal years, Exxon's also produced $113.5 billion worth of free cash flow. That's double their peak net debt position in 2020. It's massive compared to their net debt right now. This is a huge check on metric number 5. Exxon generates a lot of cash compared to the debt they're using in their business. It seems the company's in a solid financial position. It's almost time to value Exxon, but we need to cover our bonus first. As our bonus, we're looking at Exxon Mobil's dividend profile. Right now, Exxon pays a big 3.4% dividend yield. Again, they're also a dividend aristocrat. They've grown their dividends for each of the last 40 years. No surprise that that's what they've done in their last 5 years. However, we want Exxon to be supporting their dividends using their free cash flows. Because Exxon Mobil is a cyclical commodity producer, their cash flows are going to swing and fluctuate throughout these years. So Exxon was only able to support their dividends in 3 of the 5 years, even though they did grow them in 2019 and 2020 when they were not supporting them. This can work for a cyclical company, but they need to have a solid financial position and likely have cash on hand to pay these dividends. In their last 2 fiscal years, Exxon has had a low dividend payout ratio compared to the cash flows they're bringing in. Right now, Exxon easily supports their dividends using their cash flows, but as a cyclical business, this could change depending on oil and natural gas pricing. While this is a snapshot of their last 5 years of performance, it's no guarantee for the future. The big metric of them all, metric number 6, we want Exxon Mobil's average 5-year free cash flow divided by their enterprise value to give us a yield that's above 5%. If this is the case, this gives a slight risk premium to the yield of the 10-year treasury. It's the first of 2 different ways we're estimating a value for Exxon Mobil. Right now, Exxon Mobil has a $439 billion enterprise value. This accounts for both their market cap and their net debt position. It looks at Exxon similar to it being a private company. In the last 5 years, we learned Exxon Mobil has generated $113.5 billion worth of free cash flow, meaning in an average year, they generate just under $23 billion of free cash flow. When that's divided by their $439 billion enterprise value, we get about a 5.1% average free cash flow to enterprise value yield. On a current basis, Exxon Mobil produced $50 billion of free cash flow in their last 12 months. When that's divided by their enterprise value, we get an 11.4% current free cash flow to enterprise value yield. Both of these are coming in above the yield of the 10-year treasury. They're above the risk premium we're looking for, meaning for Exxon, this is a check on metric number 6. Don't just run out and buy the business. We still need to estimate their fair value per share. Everything we've discussed so far is important, but there's something missing that in my opinion is the main reason to analyze Exxon Mobil, which takes us on to using a discounted cash flow model to estimate a fair value per share. A DCF model is based off the predictability of a company's free cash flows. Like any model in any discipline, its outputs are sensitive to its inputs. Exxon, due to its cyclicality, has a low degree of business predictability. We're starting with an average of Exxon Mobil's last 3 fiscal years worth of free cash flow, then using historical assumptions to grow these into the future. It's up to you to figure out if these will be accurate or not for the company. Exxon's last 3 years take into account a very boom and a very bust year for the business, so it somewhat levels things out. If we assume that these grow at just under 0.5 percentage point annually for the next 10 years, Then in the following decade, if their free cash flows decline at 2% annually, if we add in their tangible book value, which gives an estimate of their net worth, if we're looking for a 15% rate of return, which is what Warren Buffett wants from his investments, if today's valuation multiples stay the same 20 years from now, an estimate of Exxon Mobil's fair value per share is around $94.50. That's down about $10 from their current stock price. It's well within the range of where the company's traded within the last year, but it looks like it's slightly down. Keep in mind, Exxon operates in a cyclical commodity business. Their business performance reflects this, as they have low business predictability. Also, this discount rate is an estimate of total returns to shareholders based on their free cash flows. This already accounts for both their dividend yield and any appreciation in their stock price. Most importantly, this analysis is not financial advice. It's not a buy or sell recommendation of any security. Consult with your financial advisor before making any investment decision. In just a moment, we'll give our final rating to Exxon Mobil, but we have to address something first. We've covered the numbers, but the qualitative factors may be even more important for Exxon. What are they? Well, let's find out. Looking at the factors supporting a long thesis, number one, with coordination between upstream and downstream operations, as well as integrated refining and chemical facilities, Exxon achieves a high level of integration that creates value as opposed to simply owning the assets. Number two, Exxon will see its portfolio mix shift to liquids pricing as gas volumes decline and new oil projects start production. Cash margins should improve as a result, thanks to the Permian and Guyana volumes. Number three, Exxon has responded to shareholder concerns by reducing spending, appointing new board members, increasing disclosure, and announcing emissions reduction targets. But we'd be remiss if we didn't cover the negatives as well. Looking at the factors supporting a short thesis, number one, returns are unlikely to ever reach historical levels without higher commodity prices, potentially resulting in compression of Exxon's premium multiple. Number two, until recently, Exxon lacked the level of investment in low-carbon businesses such as renewable power of its peers, or securing its future apart from oil. Number three, despite activist pressure and new board members, Exxon has not reduced hydrocarbon investment levels and continues to develop long-term projects that hold a risk of becoming stranded. There you have it for a balanced perspective of some of the qualitative factors for Exxon Mobil. Now it's time to give our rating. In analyzing Exxon Mobil, stock ticker XOM, we learned that even though Exxon is in a cyclical business, they've operated their business well. Their benefits of scale and integration show up in their business results. They earn above average returns on capital and have grown. Right now, they generate a lot of free cash flow. They bought back some shares. They're using a small amount of debt in their business. And this dividend aristocrat is comfortably supporting their dividend payouts. It's worth reiterating this analysis is not financial advice. Exxon Mobil looks attractive compared to the yield of the 10-year treasury based on its free cash flow to enterprise value yields. When we looked at a discounted cash flow analysis for Exxon Mobil, if today's valuation multiples are the same in 20 years, you believe those assumptions and want a 15% rate of return, an estimate of Exxon Mobil's fair value per share is around $94.50. The company last traded at those levels in October of 2022, well within the range in their last year. Looking at all the factors of our analysis, Exxon Mobil looks like a strong candidate for further research. If you enjoyed today's video, be sure to like it, subscribe to the channel for more stock analysis videos, share your thoughts about Exxon Mobil, and let me know what business you want me to look at next in the comments below. Thanks for learning about Exxon Mobil with me, and have a great day.